Welcome to the Nicholas Brown Podcast, a podcast talk show about real estate investing, business leadership, and personal development. Each week, we explore current real-life case studies about how to build financial independence through investing in real estate to build your personal portfolio through passive income models, along with interviews from the top business leaders and personal development leaders. Now, here's your host, Nicholas Brown.
All right, welcome to the show, everyone. Welcome. This is episode 38, and we have a special guest. I just want to tell a story how I came across this person, which I'm starting to realize is about sharing and building a bridge. But I found this person on YouTube channel, so I believe in. Reason why I say I believe in sharing and building the bridge. I want to give a shout out because I wouldn't have found out about this person, and him and his wife without seeing this on YouTube. So I want to shout out to Chris Thompson and Daniel Nichols of the YouTube channel, The Two Smart Assets. Make sure you guys subscribe to their channel. And I don't know what episode it is, but I may put it on there. But this how I came across this person here. So what I'm going to do is, before I read the About You section, if you're watching on YouTube, make sure you guys subscribe to my channel where you get more videos and information, education information such as this, which you also can see on there. You'll see on the playlist, I have loads of podcast videos to educate you and get you guys set, okay? If you're listening in on my podcast, make sure you download this also. This is a golden tool, I promise you, because it's about building bridges. So here we go. We'll begin. So Hendra is a principal of Idea Box Capital with Fortune 50 management and Big Four leadership experience under his belt. Hendra has turned his entrepreneurial ambitions towards single-family investing that eventually turned into multifamily investment in late 2018, a decision that has allowed him to access new opportunities and expand his financial interests. Currently, his portfolio includes more than 700 apartment units in Texas and Kentucky. That's as we speak. His wife, which is the co-principal, her name is Mercy Halim-Tambunan. Okay, so Mercy has successfully managed and operated 2 catering businesses that triple the revenue in a few years after getting her MBA. She decided that she is ready to embark real estate business through multifamily investment. With Hendra, her portfolio includes more than 700 apartment units in Texas and Kentucky. The story is, here's the story, ladies and gentlemen. Coming from a foreign student to the U.S., Hendra and Mercy earned their degree in San Francisco. After graduation, Hendra has worked in pre-IPO startups, Fortune 50, and Big Four corporations, while Mercy worked in the hospitality industry and successfully operated multiple restaurants. After investing in single family on the side to save for their son's college fund, they realized that it's not scalable fast enough. It prompted Hendra and Mercy to start looking into multifamily by the late 2018 and finally decide to jump into multifamily investing by mid-2019. For more information, feel free to contact Hendra and Mercy at area code 510-270-2920, or you can email them at info@ideaboxcapital.com. Welcome to the show, Hendra.
Thank you for having me, Nicholas.
I appreciate it. As I said before, man, I just appreciate you giving out that information, man. And I just want to get straight to the show. What we like to do, ladies and gentlemen, if you're listening for the first time or if you're watching for the first time, what I like to do with most of the guests, which Hendra actually qualifies for both things, which Hendra, I like to talk about personal development also, because I believe in personal development. And you draw me on that video because you're about positive thinking. You don't like stinking thinking. I don't either. I like where there's a will, there's a way. So the 3 things we focus on is motivation, teaching, and perspective. So the first thing is a little bit about motivation. What got you into this business? What motivates you?
I think that you already set it out in the introduction. I came as a foreign student, so I enjoy the luxury of going to college without the burden of the student loans. And when we have our son, we also want our son to enjoy that luxury.
Okay.
And obviously, as a college fund is just getting more expensive, and we try to shift it, our passive income become a college fund, but it's not scalable fast enough. So I think the biggest why, the biggest driver is obviously as our son to begin with.
Right.
And I think that the life changes. And then beyond that, also, Mercy and I also involved with the nonprofit organization where they do adopt kids. Both of us are from Indonesia.
Okay.
So obviously that's dear to our heart. And getting access to education is pretty challenging over there.
Okay.
So one of the areas that we're looking for also after this is just helping sponsoring students over there so they can go to college, they can go to school,
That's
right, without
awesome.
worrying about all the burden of the financial from their from the family. I mean, hey, anything we can help,
Right.
it counts, right?
Building the bridge, yeah, build the bridge.
Exactly.
As they say, pave it forward, but building the bridge. So if you can be a blessing to someone, why not? Why not have it?
Absolutely.
Basically,
Absolutely.
it's financial stable, financial security. Have choices. I see it, man. I believe in that. That's awesome. So you got a nonprofit. That's your ultimate goal. Also, can you shout out in case someone's watching or listening? What's the name of the nonprofit?
Yeah, it's actually it's a nonprofit organization called World Harvest. They're based in Monrovia. They do have what we call Adopt a Child, where basically for $30 a month that anyone can sponsor our kids, and they'll help them, introduce the students. They give the reports once you adopt them, and then you basically sponsor them until they graduate from high school.
That's awesome. How's it turning out? Is this something it's already beginning, or that's the goal? Is it?
It's already we already sponsored the last few years already, right even before we joined the multifamily investment.
Okay.
But it's just something that we're dear to our heart that we're trying to scale it up.
That's awesome, man. That's awesome. That's awesome. So it says, as I did my research, what drawing you from single family to multi, because that's what my goal. That's what I'm doing now. So what drawing you to that? Why did you switch over from? I know why, but I just want the listeners. I have new listeners.
Yeah, one of the area, this economy of scales, right? Because this is the thing. I know that in California, it's a lot of single family. You cannot find anything that's cash flowing. I know in certain area in Texas, you still can get some cash flow, but not in California. Now, one thing that really drawing to me is out of state is obviously cash flow. But one thing that a lot of people don't realize that once you hit the multifamily, which is 5 units and above, your appreciation is can be forced, because now in the single family unit, your appreciation driven by the market. If your next door is selling for 200,000, that's most likely your price going to be somewhere around there, right? But with 5 units and above, your price valuation is not dictated by your next door, but is how efficient, how effective you are in operating and renting that multifamily. So that's what we call known as a net operating income. Now, the higher net operating income going to be that, which is meaning your operation is pretty effective and efficient, then the higher valuation you're going to get. And that's something that you can still control more than just waiting for the market to hit right. Gotcha. For example, like in Dallas market right now, market is so hot, it's so strong, it's great. Everybody's happy with single family, but this method, right, the forced appreciation, what we call it in multifamily, can be done in any market, providing that there's enough fundamental that like job growth, population growth in the area that market is still, demand is still there.
Right. And for example, you can adjust the rents, right? You can raise the rent. So that's where you was talking about pretty much kind of like what's the term called, forced appreciation? Is that
correct? Yeah. Right, and then not only that, right? Not only just rent, increasing the rent, because that's on the upside, right? but a lot of people don't realize also they could be minimizing the expenses, right? Something like as simple like just changing your shower head for your tenants, right? Low flowing toilets.
Cut the cost of the water and
cut the
all.
cost of the water, utility, right? That kind of thing. LED light, that kind of thing. That's app.
Right. How many do you and your team, your wife and the team currently have? How many apartment units? How many doors is it called, ladies and gentlemen? Am I right? It's called doors, right? I mean,
yeah, I mean, number I think you mentioned is about 700, but obviously grown a little bit, and then I don't want people to think about, oh, we get 1,000 doors, like that. It's a team sport, right? It's a team effort. A lot of people don't realize that you want to get in there. It's a team sport. You play a role within a team and a partnership that how you grow together. Now, a lot of people don't realize that, when you want to own apartment building, it doesn't necessarily you own it outright. I mean, you can, but for many people, you can partner up together, and that's how you grow together also.
Which is also known as syndication, correct?
That's correct. It's a syndication where going to be people that play an active role and also a passive role. That's where the concept of syndication is. And so if you are too busy or you don't know enough about multifamily, that's where you can coming in, working with the operator that you trust, that have built relationship with, and you can take down a bigger multifamily complex that way, right? And typically during that time, depending on the return, you're going to enjoy the cash flow and then some depreciation, and then also you get gain some equity also toward the exit within a few years, typically 5 to 7 years old.
Okay, that comes to the next question, which teaches something. How did you accelerate so fast in 2 years, 3 years? So 2018, ladies and gentlemen, it's 2021 as we record this. How did you accelerate so fast? That's a lot of units. That's aggressive. To me, that's aggressive. I don't know in the commercial multifamily people think that's low or that's small. I think that's aggressive, man.
Well, I can tell you that because I'm smart. I'm pretty, all things, but not. It's just basically, it's talking about proximity, right? How do you build momentum in anything that you do? It's just building momentum because of the proximity. You are who you are based on the people that you're surrounded with. I happen to be surrounded by people that know their stuff in multifamily and they want to open up and partner up with me and helping me, and then we can grow together. That kind of a deal, that partnership that we're always constantly looking. And we're fortunate enough to be associated with those partners in the beginning of our journey.
I saw that. Which, could you explain the 3 T's, ladies and gentlemen? This is how I came across that. That drawing me. I related to that. I understood that what he said, ladies and gentlemen. The 3 T's. How you get in this? Because it's a partnership, it's a relationship. What is the 3 T's you was talking about? If you to start the business,
So I do believe that in building a relationship, you got something to offer value. One thing that really a big impact for me when I was reading a book called Go Giver. I do believe Go Giver by Bob Burg. That book was so impactful in my life that became a philosophy in my building a relationship with other people.
Okay. Bob Burg.
Yeah.
Write that
B-U-R-G,
down.
The Go Giver. So when being a go giver, I mean, you always put other first, right? You always put everything, go giver mentality or go giver mindset. You always put other people priority first, and you serve their need. And I do believe that we can do that because of we have 3 T, time, talent, and treasure. In everything that we build relationship, we get something that we can give to other people. Well, treasure is your money, right? Your capital. Sometimes you feel like the easiest way to you is just like give some money, and somebody asks for help, you give the money. That build relationship, right? You help them out that way. But the other 2 is also pretty crucial. You have also your talent. because in building relationship, you got something that you can bring. Maybe your experience, maybe the skill that you gain from your job. It may be something that you're already talented. I mean, some people are already talented enough with with language or Excel programming or coding or music, right? In any way that you can something contribute from there. And then the last one's actually the time. That's the last thing. That's the last thing that people forgot, that they have the time. I mean, straight T, you can build a relationship with the partner that you want to, potential partner that you want to partner up with in that case, or even building a relationship together.
Right. And that helps build momentum also. You want to, as we say, what can you come to the table with so we can meet our goals to get momentum? So action.
Absolutely.
That's action.
Absolutely.
I believe in that, most definitely. So here's the last thing, and I definitely appreciate your time on here. What are the pros and cons? I know it's what should someone look out for? Because some people think some things, like in regular real estate investing, is a myth. Watching the late night shows or whatever. So what are the myths or misconceptions people have or about multi-family properties? Or what should you look out for? What should you stand out for?
So I would say a lot of people want to invest in real estate, but they neglect the fundamental. They got to learn to invest in themselves, right? Okay. Getting into investing in themselves through courses, education, mentorship, coaching, because a lot of people just want to see all the the bell and whistle from the late night TV shows, like, oh, real estate, this is great, passive income, cash flow. This is a real business. I mean,
keyword, business.
This is a business, right?
That's right.
If you don't really educate yourself enough, I mean, you can lose your pants literally too. So that's the reason why it's very key for people that want to get into real estate. Make sure they get educated themselves. Think about it. Before you invest in real estate, invest in yourself, because that kind of knowledge is going to carry you for a much longer time. That's right. And number two, vet your partners. I always tell people, like, even though you're playing more like a passive role in the syndication or even, any deals, but think about the relationship that you're building. Nobody gonna be, think about like people getting married, right? Nobody pick up the girl off the street or boy or guy off the street. Like, hey, will you marry me right away? You gotta go through a process.
Right.
And a lot of people neglect that because they got a shiny object syndrome. It's like, oh, this is great. This is real estate. This is multifamily. This is going to be return. I want to jump on it right away. Invest in yourself. Get educated. Then you're going to see it. And number two, not only just seeing it, the deals, but you're going to see it, the partner, the characters, the value. Are they aligned with you? Because a lot of people that we have a shiny object syndrome, we overlook the quality and the character and the etiquette and the morale of the partner who's going to be operating the business.
That's right.
So that really, really help you out to avoid all the bad deals. That's a fundamental things that I really recommend for people that want to jump into any real estate deals.
Okay. Well, hey, Hendra, I appreciate your time. This quick moment here, which I know you got. I appreciate, ladies and gentlemen, because he has another I think another job. This is more passive what he's doing now also. So I appreciate his time, which to tell a story. He asked me how could he help me. I love that. And I appreciate that, ladies and gentlemen. I appreciate that. So I'm seeing how it grow. But any last words or any shout outs or anything you want to give out to the listeners before we end this?
Yeah, and then feel free to reach out to me. Anyone that want to ask any questions, I'll be more than happy to help. Anyone that want to get into real estate, want to learn about multifamily. I mean, I am where I am today just because somebody invested their time, with me to take me where I am. I want to pay it forward too for people that want to learn about multifamily, want to learn about it, or want to anything about multifamily. Just feel free to reach out. You can go to my website at ideaboxcapital.com or shoot me an email at info@ideabox capital.com. And I'm also in Facebook too. Look at my name at Hendra Tambunan. I'm be more happy to connect and help.
Okay. Another tip, ladies and gentlemen, I want you to reach out to him because I'm going to invite him to come to my meetup group. My meetup group is called Passive REI Network. So as we speak now, I have 4 locations in the Texas area: Dallas, Fort Worth, Austin, Houston, and Dallas, Fort Worth, Austin, Houston. I forgot the next, San Antonio. But I invite you guys, which I invite Mr. Hendra. Hopefully he be there. Where you reach out to him if you have any questions. I'd love to have you again, Mr. Hendra. If we have a live meetup, or whatever. If they got any questions, anyone is interested in becoming a passive investor, they just reach out to you. But thanks for coming on to the show, though.
Thank you for having me, Nicholas.
Okay. All right, ladies and gentlemen. Make sure, once again, you subscribe to this channel. Make sure you download this podcast episode. And once again, don't condemn, don't complain, because you have a choice to make a change. Have a great day.
Thanks for joining us on the Nicholas Brown Podcast. Make sure to visit our website, www.nicholasbrowninc.com, where you can subscribe to the show in iTunes, Stitcher, or via RSS, so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. If you like this show and you are a new real estate investor, then check out one of Nicholas's free reports called the Wholesale Dominator Report, also located on our website, www.nicholasbrowninc.com/free reports. Be sure to tune in for our next episode. And remember, don't condemn, don't complain, because you have a choice to make a change. Have a great day.